in that show, if not the most important person in that show, is going to join me next, and he's going to talk all about, well, data, really, at the end of the day. My trading buddy. G'day, Ash. How you doing, mate?
I'm very good, mate. How's things with you? I mean, you're way too kind to say that I'm the most important. It's definitely a shared thing between you and I, and I think depending on which guest is in on the day, I'll probably take the crown at their particular moment.
Yeah, we're only there to pass it on, aren't we? We like
really,
to relay, pass the baton on, relay players.
Exactly.
What's going on with the wonderful world of data, mate?
Well, my wonderful world of data. I'm going to bring everybody's eye to the US dollar. I will mention Bitcoin just in passing, just because it's so bullish. Look at this: 36 months on the commercials index on the COT data at 100%. 18 months, 100%, 6 months, 100%. The longs have increased by 20%. The shorts are down by 9%. So just in passing, I'm just going to mention Bitcoin and just leave it in everybody's back pocket because it is the talk of the town really right now. So it's well worth just understanding that the COT data is certainly suggesting that certainly last week that there was a lot of traders that disclosed that they were bullish on Bitcoin. But I want to bring our eye to the US dollar, really, because it's going to give us a decent foundation in everything that we're looking at. You know, what is going on with the US dollar? Just when we think we're starting to move to the upside, and just when we start to think that Jerome Powell and the Fed are getting quite hawkish on the policy stance, everything changes around again, and we get a speech last week, which was quite uncomfortable watching, I have to say, from Jerome Powell. And they look at this stage like they don't really know what to do next. I'm not going to say they don't know what they're doing, because they're very intelligent guys, but they don't really know what to do next with the information that they are currently holding. We'll get to some of the issues with that when we look at gold in a little while as well. But just having a look at what the COT data is suggesting about the US dollar, the 36 months down to 38%. Now that isn't bearish enough in the extreme for me to say that we are looking for definite sell signals there. I'd really want to see it below 20% or 20% and below to kind of give me an idea that we should be looking at shorting the US dollar over the longer term. But when we do look at the 18-month, the 18-month is down 11%, so nicely nestled under that 20% mark. And looking at the 6th month, massively down under the 20% mark at 0. Commercial longs increased their position by 62% last week, and the shorts were only increasing by 27%. So this is conflicting information, which really kind of states to us that the commitment of traders is in almost the same position as the Fed. You know, they almost don't know what they're doing. Now let's have a quick look at the seasonals, and then we'll talk about how I would interpret this market data in relation to a chart. So if we look at the seasonal aspect of this, it kind of bottoms out over the next couple of months, the US dollar. You know, there's a little bit of up, a little bit of down. Generally speaking, it's in its lower position down here. But there may well be one more or possibly two more moves to the downside. But this would just describe to me that the US dollar seasonally could be in a lower range. And if we are looking at the COT data again, just to bring us kind of back full circle, the COT data being slightly misleading when we kind of look at the 36-month, but then the 18-month and the 6-month, but the buying increasing and the sellers increasing by only a third of what the buyers are. It's also suggesting that we could well be in a bit of a range. So the way that I would look at this and start approaching the US dollar is to anticipate that there's going to be no breakout. Julian covered Jackson Hole. He talked about Jackson Hole. And it's a meeting of the central bankers. We'll all go there and discuss how they're going to approach the world economy. That may well be the dates that we're really looking for a potential break to the upside or the downside with the US dollar. It's not necessarily going to be the case, but it could be. So that suggests that we could be in a range, and that says to me, sell at the high of the range, buy at the low of the range until we kind of meet that Jackson Hole period. There will be fundamental data that is coming out in between times, and if it's extreme, then we might start to get some movement. But because of that particular date and because it's so significant, and what the COT data is saying and what the seasonality is saying, it's kind of saying to us that, you know, looking for a trend in the US dollar, maybe before we get that important meeting, could be a little bit, it could be a little bit ambitious. So the range traders may well come into play here, or possibly looking for trends on shorter term timeframes to play the longer term ranges as well, could be the idea. The takeaway, mate, is to sell in the sell zone and buy in the buy zone for right now.